right, good morning everyone. 10:23 Eastern Time, Monday morning, March 17th. And we're looking at, I think, a short-term bounce in the U.S. markets, mostly just because there was some huge volatility last week. You know, the S&P 500 was working on 30 and 40 point ranges. The Dow had 400, 350 point ranges. So we're just working through a lot of volatility. What you're looking at here in the middle is the S&P 500. This is a continuous contract. The key level is going to be these lows over here from January, I believe. I've talked with some of my trading mentors about this, and if you look at these reversal bars, these are a key indicator in judging supply and demand. In fact, if we go over here, let's put on a square. You can see that this yellow highlighted area is the support zone for the S&P 500. And you can see that the market pushed down here last week, week before last, and then last week managed to push out of it very, very strongly. We had another reversal bar right there. They gapped it down today considerably. The market closed at 1292 and then opened up actually down around 1260. I don't have the S&P 500 as a live contract on my eSignal platform. I have it on a live basis on another platform. But you can see that the market gapped down another 30 points. This type of action is very, very common when the market is about to reverse, simply because the professional money, what they like to do inside of a support zone like this is to let the marketplace build stop orders. So they're going to be stop orders below these lows, below these lows. So they're going to come in, gap the market down into this area, trigger all of these stops, fill the stops down here. So in other words, you've got customers that are looking to sell right here. Okay, so if they gap the market down, these sell orders automatically become live. The professional money buys those orders down here. So, you know, they basically stick it to these people. There's no other way to say it. And they're now long. Typically, you'll experience the market rocketing up off of that. In fact, the S&P 500 is up considerably right now. In fact, the Dow, I think, is up almost 160 points off of the lows. It's only down about 77. The reason why I say that is the Japanese yen has been tracking, for some reason, the U.S. market very closely. I think it has to do with the overall credit picture, but be that as it may, just something for you to look at. The reason why I mention it here is we have a trading opportunity coming up. This is going to be a long trade above 97.55. 97.55. That is on the Japanese yen. I'm basing this off of the 60-minute pattern here. You can see this triangle or pennant pattern that is formed. Also, simply because the yen is down so much, we've gotten what I call the radical change. If you've had a chance to look at the Dallas videos, okay, so go in, check out the Dallas webinars, the Dallas system, where you can get this radical change idea down. We'll go ahead, I'll put up, there we go. There's the different moving averages. You can see here, there's the moving average line right there. There's price. This is on a weekly basis, by the way. You can see just a big, big change. I think we're going to be experiencing a reversal here fairly shortly. Also down here on the moving averages, you can see that the moving averages are starting into this weave process. And this area here, this 97.55, is above the weave, giving us the potential for a momentum push to the upside. Not a whole lot going on with the euro right now. Let's get to that quickly here. Although I am looking for a push to the upside here. This is going to be a long trade above 1.5816. Again, check out the Dallas videos. The Dallas system will clue you into some of what's going on here. For now, just know I'm looking to take a long trade above 5816. on the euro. If either one of these trades gets triggered, I'll come back with a video illustrating the different money management tactics. But for now, I want to get this video out because the market's moving fairly lively right now.